Hey everyone, welcome to the KE Report in a daily editorial on Friday, November 28th. I hope all of our US listeners had a great Thanksgiving yesterday, and thank you all for joining us today. There's a fair bit to talk about in the market, especially on the metals front, with silver making kind of an outsized move, completely outperforming gold and breaking to an all-time high at the tail end of November. We're going to touch on that, but we are also going to touch on really what's going on with rate cut expectations and markets broadly. Chatting right now with Marc Chandler. Marc is a managing partner at Bannockburn Global Forex, also editor of the Mark to Market website. I'll post a link to Marc's website in the show notes. Marc, before we get into the metals moves, just want to ask you in terms of key aspects to note for this shortened and broken up trading week in the US. What's standing out to you? What actually matters here for investors?
The most important takeaway from the recent days has been the shift in market sentiment once again on Fed policy. And this shift is now where the market's pricing in. And when I say market, I mean like the Fed funds futures and the overnight index swaps market is pricing in about an 80% chance the Fed does cut when they meet again next month. And so as that sentiment has shifted, you've seen what's happened. The U.S. 10-year yield has been fraying this 4% level. And these lower interest rates have helped drag the dollar down. And so the dollar index is really finishing this week on a very soft note.
Well, Mark, just on that point of the currencies, we were talking off mic about the importance of looking at the yen, looking at what's happening with the Bank of Japan and their central bank. So a lot of times the US dollar moves in relation to financial news and interest rates here in the US, but it's counterbalanced by the moves in other currencies. Anything else internationally playing into this pattern?
I'd say two things. One is that just like the pendulum of U.S. expectations have shifted, they've shifted almost as dramatically in Japan. The market had all but given up on a rate hike next month by the BOJ, but recently strong economic data coupled with the weakness of the yen and has just helped spur, I should say, some hawkish comments as well, just helped spur this swing back in the pendulum where the market now is more than 50% pricing in a BOJ rate hike next month. So that'll be the second rate hike of the year, which would bring us up to about 75 basis points as their target rate. The other thing that's happening, this sort of tracks the euro as well, and that is I look at the U.S. German 2-year interest rate differential. And thinking that, when I look at it over time, it seems to track, or the euro seems to track that. And as investors or participants, we might be indifferent. Well, which one's paying you relatively more? Well, the U.S. pays more than Germany does, but that spread, that 2-year spread, has fallen to about 145 basis points this week. And this is a new low for the year. And this is, just to put it in perspective, it was 220, 240 basis points at the beginning of the year. I think as we move that spread to closer to 100 basis points, I look for the euro to continue to recoup what it's lost in recent years. So I look for that test on 120 still, though probably not this year. We got to 119.10 so far this year on September 17th, and I think that's what Fed Day was, of course. And so I'm thinking 122 to 124 next year is reasonable.
Marc, just on the interest rate environment, look, the Fed, yes, okay, they might cut, they might not. We'll look into next year for who knows how many cuts. The market will be trying to predict it, and we won't know until they actually do it. But fact of the matter is, we have seen rates generally turn down over the last 8 or 9 months in the US. Rates have gone lower. It's a grinding fashion, but we are getting close, at least on the 10-year, to breaking to almost a 52-week low in rates. Is this a long-term trend? Do you think that we have seen the peak in rates for, let's say, 12, maybe even longer months?
I think that U.S. rates have peaked. I think that we're really thinking about how far they're going to be falling. Right? And so even if you be conservative about what's in store, it would seem that we should be expecting 2 to 3 rate cuts between now and the end of next year. And that's, I think, being conservative. And I think they were going to see this. The next place to check is when the Federal Reserve does meet in December, they will update their summary of economic projections. And in it, they tell you what policy rate they think will be appropriate. And that, when I say they think is appropriate, of course, it's all the different, the different members, and you get a median and a range for that. So there are obviously, especially now, I think people appreciate the wide divergence of views at the Federal Reserve. So the median will be like what we used to talk about a camel was a horse mating committee. And so that's what maybe the forecast might look like a bit. But I think that we get the general idea, and the market, I think, is there as well, looking for as many as 3 rate cuts between now and the end of next year.
Mark, do you think that's playing into the strength in U.S. equity markets? Because they've been very resilient really all year long, but even recently, and they're still up near all-time highs, maybe just a little off them from a couple weeks ago, but still punching up nicely today to end the week and then the month. How are you looking at the U.S. equity markets?
Yeah, I mean, I had thought that there's a greater chance for a pullback. And when I didn't see that, when it's obviously I was wrong, I got out of those type of insurance policies I'd buy, and those kind of when I think that there's a tradable top in place. Because I am worried about on valuation grounds. But right now, especially after that gap higher on Wednesday, the S&Ps to me look like we should be rethinking about what just happened, and that is that pullback that we saw beginning in late October now seems just a correction, and that we get another run up to new highs. And so it's hard, I think, not to be bullish. And yes, I think that the idea that the Federal Reserve is going to cut rates again has also, I think, encouraged the risk-taking appetites.
Well, another market that we like to talk about a lot are the metals. Let's move there because there's something developing today in the silver market that I think a lot of people, even the bulls, were thinking that there could be a bit more of a correction in silver and gold after what has already been kind of a banner year. Silver is having a heck of a month. It showed a little bit of weakness last month, came off some of its highs, consolidated right around and over that $50 level. And now it is making a huge move today. Silver is up over $2, over $3 actually. It's over $57 on the futures market. It's almost a 7% move today, vastly outperforming gold, vastly outperforming every other market. Mark, what's going on in the silver market in your eyes?
Yeah, holy cow, huh? What a move. I think that caught a lot of people by surprise just at how sharp it has been. But my sense is just like, even if we didn't know anything about the fundamentals, I think that just the price action itself looks very, very constructive, of course. Here we are at new record highs as the month winds down. I'm thinking that this technically it is worth another $10. So from 55, where we're breaking out of today, 65, I think it would be the next reasonable target, assuming that we pulled back, and that pullback, we're going to flip it over again. And that's how we get, it was about a $10 pullback. You get the $10 rally on top of the old high, I think. And just a reasonable target, I think. But so what's going on fundamentally? Well, it does seem that there is some dislocation in the market, and by that I mean that even in the popular press, like Financial Times, Reuters, stories about a short squeeze taking place in China, helping to drive the price higher, and it has these like ripple effects, of course, throughout the world. So it's hard to know where the truth lies here, but it does seem that there's been an important dislocation. I just don't think that like silver jumps. What has it been this month? Almost $10 on just speculative buying. Given that, think about how long it took us to get the last $10.
Well, Mark, just to that point about the silver squeeze, this is a narrative that's come up in the waters we swim in for a while now. And famously, back in early 2021, there was the hashtag silver squeeze that took the internet by storm. But we've been hearing about silver squeezes for a long time, and a lot of rallies do start with the shorts getting squeezed. But there's supposedly the epic short squeeze of all time in silver that people have been waiting on. And I probably have had a half a dozen emails just this morning asking, is this it? Is this the big squeeze? What do you think about that narrative that there could be so many shorts in place in a particular commodity like silver that if it starts running to the upside, usually what we see is the futures market come in and put higher and higher margin requirements in place, and that usually kills it. But what do you think about the idea of this epic short squeeze in the silver space?
Yeah, I don't know. I mean, I wouldn't even know how to like try to begin even assessing it. I would though think that given that say that before this week, or yeah, let's say before this week, the last 5 days, when silver has been up 12%. So year to date, before this week, silver was up about 82%. I don't know a lot of shorts that would hold on to a short position in the face of an 82% move against them. So I don't know how much this is like, what kind of squeeze this is. The kind of dislocation is really they're talking about with China. It doesn't seem to be like a speculative short squeeze, but sort of having the silver, which as you know is an industrial metal besides a precious metal. And maybe that's another thing that's kind of interesting. I think that's happened is many people I talk to about gold always want to know, well, what are the central banks doing? Well, it turns out that there has been a larger accumulator of gold in the past month or two than the central banks, and that's the stablecoin Tether. And so there's been some interesting journalistic pieces about it recently. And so I think that if it were me and I saw silver, I would think that it would be it could fulfill the same function as gold.
How do we make sense of this then, of silver completely outperforming gold? Because it was earlier this year that we had the gold silver ratio over 100. That's the whole way down now in the 70s. It's been a very strong move there. What does it tell you about speculative money seeming to favor silver right now more than gold?
Hey, that's been the problem, right? I mean, trying to figure out, get your handle around speculative positioning. And because of the U.S. government shutdown, we're only beginning to slowly get the commitment of traders positioning data that's so important to really get a true assessment of where speculators lie. So right now, I think we're flying a little bit in the blind. I just think it's become a momentum trade, and everybody, of course, wants to get on it.
Do you still think that the general equity markets or generalist investors look at silver as poor man's gold? And the reason I ask that is that in India, there's actually been a huge influx in buying of silver because gold got too expensive. So throughout history, what's happened is that gold has gotten so pricey that people then pivot to silver. Do you think that's playing into it?
Sure that things like that play into a cultural kind of preferences. I wonder though if there's not also an industrial demand side of it too, with some technologies, whether it's for batteries or whether it's for semiconductor manufacturing. But you've got to keep it. I think for me, I keep in mind that silver always is also used more industrial than gold is. Now I tell you that gold is still. I think many people would be surprised about like how much gold there really is, say, in our cell phones or something like that, or computers. But yeah, so I think there's probably, for me, when you get such a large move like this, there's probably not just one cause. There's probably a lot of several different factors that sort of like are braided that are pushing in the same direction.
So these moves in silver, they have come before. They can be very profitable for investors, but a lot of people that have been in this space do remember that when the price spikes, it can roll over for years, if not a decade or longer after some of these completely outsized moves when it just gets again kind of euphoric to the upside. What do we need to watch for in this case, Mark, to I guess, in a way, trade in and out of this correctly so people don't get stuck if it does roll over?
Trading in and out of it. I would just have, to me, there's two things that play into such a decision. First is just good old-fashioned money management. How much are you risking? How much do you think reasonably you can make back? What's the profit? So like where your profit objective is relative to where your stop is. And so it's really to be disciplined about it. And this other thing that occurs to me is some level of, for example, to your point about huge rallies and then the sell-offs. So in 2011, silver got up to almost $50 an ounce. And it took us another 10 years before we bottomed, say about $11 in 2010, excuse me, in 2020. And so we've had this new leg up. And so I think if we go back below $50, I probably want to take some profits.
Well, Mark, when you look at it technically, what happened in 1980 and what happened in 2011 were very short-lived moments in time where silver got up to $50. Like it hit it and it went up on the pendulum and then it shot right back down. This time, throughout the month of October and November, silver's really hung in the high 40s to the low 50s for the majority of the fourth quarter here. So, in that sense, do you see it as more technically constructive than the prior periods where it's not just a parabolic move, but it's actually been a consolidation in price before the next leg higher?
Yeah, I think it strikes me as being bullish, and maybe we got that today. I mean, you're talking about this week, 12% move. It just seems to me a huge move in a short period of time, and so I think that the ranges have been so wide, there could be some profit taking that could hurt some of the late new longs that have to get established because they think it's a breakout.
Hey, fair enough. This is a bull market. There's no doubt about that. Keeps moving higher, and the corrections, even the technicians that have been calling for corrections, have been much shallower and shorter lived. So, just a bull market to continue riding the wave. Any other markets out there, Mark, that stand out to you in terms of bull markets or some other outsized moves?
Think that we're seeing this move in the dollar right now, and what I like is the Australian dollar. Partly, I think that it's had some strong economic data. The central bank is not going to be cutting rates again this year. They meet next month. I like the Australian dollar as maybe being one of the stronger currencies, say into the year end. But the other thing that's amazing to me is that as we're talking about gold and silver, how well they've been doing, the rare earths have sort of lost something. There was such this speculative, and I can appreciate it from a long-term perspective, such a strong gains, and the rare earth stocks really still haven't regained their early luster. So I'm surprised a little bit by it, and because I think that the issue is going to keep coming back. We haven't really resolved the issue of building, processing rare earth capability on a scale that we need in the U.S., Europe, or Japan.
Yeah, what a rollover in those rare earth stocks. Again, it's a story we have seen before. It is on more people's radar, though. So, a few more comments maybe from the current administration, a few more investments into those rare earth companies can get that ball rolling again for what is a very small market, even compared to silver. Mark, thank you as always for your time. A lot for us to talk about in this choppy, shortened trading week. Again, Mark Chandler is a managing partner at Bannockburn Global Forex, also editor of the Mark to Market website. Click that link in the show notes to follow along with Mark's daily commentary. Mark, thank you very much for your time. I hope you have a great weekend.
Good luck to everybody.